Hey, not a bad day here in Tennessee. Not a bad day at all. So we're going to talk about why the real estate market's so locked up right now. Give you a few stats to chew on. But before we do me a favor, like this video, subscribe to the channel, hit that notification bell. Assuming that you want to hear from me, I'd appreciate it. Happy Thanksgiving too, by the way. I'm not sure when this video is coming up. Might be just before, might be after, might be the day of. I don't know yet. But I wanted to go ahead and get this one out there, or get this one recorded anyway. I'm gonna be heading out of town. I may surprise y'all with a little video where I end up. But anyway, I want to talk about this real estate market right now, and it's a mess, y'all. It is just an absolute gridlock mess, and I don't think it's gonna get better. I think it's gonna get worse. Now I don't think it's just gonna be like pulled plug worse. I just think that it's going to keep decaying, and the decay could accelerate going into 2026. So let's talk about some stats. 90% of mortgage holders have a rate under 6%. That's not bad. That's most. That's all but 10% are looking at a under 6% rate. That's pretty good. And so nobody wants to trade in their cheap mortgage for a 7+% one, right? Yeah, I wouldn't either. And then to compound that, 66% of the people that have mortgages are under 4%. That's 2/3. So 2/3 of American homeowners are sitting in ultra low rates. People just not want to let go of that. And then a quarter of the mortgage holders in this country have a rate below 3%. Below 3%. Now, in Georgia, when we sold our house about a year and a half ago now, we sold it pretty much just right on the back side of the peak. I mean, we got out in the nick of time, and we had a 2.5 on a 15-year. And I did refi during the right when COVID, like 2-3 months after COVID hit. And if I actually would have waited a little longer, I probably could have got it right at 2, or just a hair under that, just right around there. I mean, that would have been perfect timing if I had it, but I didn't know, so I wanted to take advantage of what I had. So yeah, when you look at those numbers, people that low rates, and they've had their house now in most of these cases for a long time. They're low, and the cost of housing has gone up because of inflation, because of dollar debasement. That's why. And we've talked about this if you've been watching my channel. It's not because the value of the home has changed. It's the division. It's the division of a debased dollar that has caused the problem, and why we are seeing prices, affordability crisis. And then you mix that with incomes aren't increasing at the rate that everything else is. And if you work a traditional job, you go and you work an hourly job or even a salary job, and you're not in under the top tax brackets or whatever, your ability to outpace inflation kind of gets you stuck, where it's hard for you to move. So if you wanted to move right now, you're talking about your payment's going to double. Well, for a lot of people, their income can't support a doubled mortgage because their mortgage hasn't gone up faster at a faster rate. So, next little stat I'll share with you is, active listings are down roughly 35% versus pre-2020. There's just not as many listings on the market, and all that. It's pretty obvious, right? It doesn't take a rocket scientist to figure this out. Well, that's because the people aren't selling, so the active listings are down. However, I will say where I'm at, and I follow some pretty big real estate analysts, the number of listings on the market is increasing, and it's accelerating, because rates have come down a little bit, and I guess the ones that can and do move and want to move, they're willing to make that jump. And so we're starting to see that a little bit. And new listings are at a 40-year low. I mean, think about that. 40-year low. I mean, you're talking the 80s here. That is a long time ago. And so, yeah, there's just not, people just simply aren't moving. And the inventory and the new listings that are on the market is just at a historic low. And then you talk about housing affordability is at the lowest point in 40 years. Why? Well, because we printed $7 trillion-ish, maybe more than that, since 2020. And the dollar has debased 80% in those same 5 years. Hello, how's that a good thing? And I just saw too that we just hit $39 trillion. $39 trillion we just hit in our debt. It is growing now at a compounding pace that's just unfathomable to think about how much and how quick things have the debt has climbing. I mean, literally in a month or so it'll be 40 trillion. That is just not good, ladies and gentlemen. And the government's just pretty much said we're just going to print our way out of it. And then we got December 10th rolling around where we're going to have another, hopefully, a rate cut. I think it calls for a rate cut, but I don't necessarily think that solves our inflation issue, which has come down a little bit. But man, when I go to the grocery store, inflation's higher now, it seems, than it's ever been. And that's where I'd really gauge it. And I think most Americans are like me. They look at that and they say, well, I go to the grocery store, there's nothing coming down. And that's your everyday consumer inflation is different. It takes 40% of your median household income to afford a median home. And that's 25, long-term average is 25%. So we're 15% outside of normal there. That's not good. And then home prices are 45% higher than in 2019, which is before the pandemic. It's just crazy. The rates have skyrocketed, but the prices didn't fall. And there's your gridlock. I've been in this game for a while, real estate and tech, and I follow a lot of analysts. I follow Nick Gurley a lot. He's with Reventure app. If you're not familiar with Nick, and he's actually in the Nashville area. He was down in the Tampa area and relocated just recently up here. I follow him, and he's got a great software that if you're in the market for selling, buying, he's a good resource for you. Reventure app, Nick Gurley, Girli, I believe it is. But yeah, he's solid. I follow him and I keep up on the numbers. And real estate's just it's bumming right now. But this one's different than 0809. That was a subprime mortgage. That was a totally different issue than what we have now. These variables are different, and you gotta pivot to those variables. Now, I sold my house just on the back side of the peak, and I had a 2.5 rate mortgage. People are like, oh my God, why would you get rid of that? I had a great house too, basically $1 million home. But my game plan's different. One of the best ways, let's just put it that way, to capitalize on a real estate market is to sell at the peak, rent, and buy when there's blood on the streets. And that's precisely what I'm doing. I've got cash, and I've had that money working very well, very hard. I've been able to grow that cash pile, and so by deferring into rent, and so then I will be able to go out and buy what I want for cash. Now, and I will avoid the interest cost. Now, a home, just so we're clear, is not an asset. It's a liability. Your primary residence is not an asset. It is a liability. Why? Because you got interest if you have a loan. And even if you don't have a loan, it's still a liability. You have insurance. You have maintenance costs. You have property taxes. It's just a constant flow of out. And when you buy and invest in stocks or Bitcoin, there's no interest on that. There's no costs on that other than the small little fee that you were charged to acquire it. But yeah, the cost around owning is just crazy. So, and I don't think that's going to go. We may see property taxes get eliminated in a lot of places in this country because I think people just think it's stupid, including me, this guy. Get rid of it, and especially if when you hit a particular age, like my parents. Why? My parents have owned their home. They've owned their home, and they're still paying taxes. They don't have any kids in the school system, but they're having to pay property taxes for what? Now they're still renting from the government. It's just like a negative interest bearing savings account. Well, for them, they paid cash. So there's, which what it is what it is. But their house is now going down in value back to where it was when they built the house. And so, yeah, we're in a crazy real estate market right now. I don't see it getting any better. We have an affordability crisis, as we've talked about. If you're a Gen Z or you're a young millennial and you're trying to quote unquote have a home, live the dream, right? The American dream, ain't happening for you. Now, is that to say that prices won't just totally tank and collapse on housing over the next handful of years or so to make it more affordable for them? It's possible, less likely, but the problem becomes is the income. The income is what drives it. The pace of inflation is so out of bounds compared to people's income level. And when you have that scenario like that, you can't catch up. If you're working a salary job or an hourly job, there's just not enough. You just can't outpace it. So that's why you hear me say and recommend that you should be investing your money, as much of it as you possibly can. Go without as much as you can go without. Put that money into good quality tech stocks. Put it into gold. Put it into silver. Put it into Bitcoin. Put it into these assets that have a higher rate of return and a much quicker rate. That's the only way is you're going to be able to possibly afford something. Affordability has to get more in line, and incomes have to increase. And so then you mix into that AI and all the jobs that's going to be taken away, and we've got a job market issue going on too. And that's what's really going to kick the real estate market. I'm seeing stats where that people are going delinquent on their credit cards. They're 90 days, like huge percentage of people that are 90 days past due. The percentage of people, like Fidelity came out and said the amount of people that are taking hardship withdrawals on their 401ks and their IRAs is at an all-time high. People are leveraging money to just afford the daily costs of living. That's not gonna end well at all. And that's gonna start being foreclosures are gonna start going up big time. And then what happens when foreclosures start happening? Prices come down, right? Because these banks they want to get rid of the asset and get it off their books. And that is in line with what happened in 08, 09. So yeah, it's a crazy time out there, guys. Real estate's locked up. I think it's going to unlock itself, but it's not going to unlock itself in a good way to start with. But those that are patient and have prepared are going to be able to come in and clean the mess up and come in and get some good deals and pay cash. And that's a good thing. And that's part of my plan and my goal. Everybody has their own, and that's good. Just whatever works for you. So I hope that we ease out of this real estate thing, but I don't see it happening. I'm seeing all sorts of data coming out left and right of how not good the market is. And I mean, we got people that are 90 days late on their utility bills. I saw that one. That was another one. You got to have your power bill, right? So people will stop paying their car payment. They'll stop paying their some of these other credit cards. And then, so in order to what? To keep the house and to keep the power and the utilities on, right? And the water. Well, that's some of the next things to fall. People they'll just give up. They'll be done. And so I'm hoping that bad doesn't get that bad, but I don't see that things are going to change. So yeah, guys, we'll continue more talk on this real estate thing. And I would suggest that if you're a Gen Z or you're coming out of college right now, you need to rent and you need to invest as much as you can to get as much growth as you can get. And then if you're in my age group, if you're a Gen X or a boomer and you're looking and you were able to get out at the peak and sell at the peak and you can rent right now, that's a good situation to be in, because when this market comes down, and it will, prices go down just as much as they go up. And it's funny though, they fall a lot quicker than then they go up. So anyway, that's the video for the day, guys. I appreciate y'all tuning in. Happy Thanksgiving. We got Thanksgiving week coming on right now. It's actually not bad here in Tennessee. We got some rain last night, but it's really mild. Do me a favor, like this video, subscribe to the channel, and hit that notification bell if you would, and watch one of these other videos that pop up here on either side of me. I'd appreciate it. Gen X guy out. We'll see you. Bye.